Night Stock Charts Live, and we have a lot to go over. Earnings after hours, Apple, Amazon really cratering hard at the lows of the after hours session, down about 20%. It has since rebounded to a certain extent. We'll check in with that chart in a moment. We're also going to talk about where our support levels on Amazon, Meta, Google, Alphabet. Keep doing that. And Apple, if Apple should break, Apple's relatively unchanged in the after hours session, certainly within the market makers' anticipated move on earnings. So let's begin first with talking about the economic data that came out this week. We'll let people populate in, and then we're going to go to the charts. We're also going to talk about how you're poised to close out the current week. It's Thursday, one trading day left to go. A lot can happen. So let's get to it. And we're going to stick around. We're going to do chart requests later on. And let's begin. I am not going to forget to share my screen. And there we go. Okay. So we had GDP came out this morning, and it was really, really good on the headline. Now, remember that the United States is a consumer-based economy. Most of the growth that ordinarily happens within the United States is driven by the consumer. So the headline here looks really, really good, and it is good to a certain extent. So U.S. GDP grows 2.6%. Remember, the last two quarters have been recessionary. People don't want to admit anymore because you have a potato in the White House that says that we're not in a recession because they changed the definition of a recession. Sell silly somewhere else, right? We don't play that game. We are in recession. Talk to me when we get two back-to-back up quarters of positive GDP, and then maybe we'll be out of recession. So U.S. GDP grows 2.6% in Q3, driven entirely by trade. Price index comes in cooler than expected. So what does this all mean? Let's take a look. Let's go to the numbers. Personal consumption, U.S. consumer, around 1% of the bottom line number, down from 1.38%, the lowest since 2019. Fixed investment subtracted. Think about this. This is investment by businesses in their businesses. Fixed investment subtracted 0.89% from GDP, in line with last month's negative 0.92%, as corporations continue to retrench ahead of recession. We are in recession. I don't like that Zero Hedge does this. They're playing along with this game as well. We are in recession. We have been in recession for over a quarter now. The change in private sector inventory shrank for the third quarter, this time shrinking GDP by 0.7%. So on a fundamental basis, a snapshot of the U.S. consumer and business investment, we're not doing good. On the positive side, our net exports rose 2.77%. You may be saying, oh, what's going on here? Wait a minute. Businesses aren't investing. The dollar's really strong, making our products more expensive overseas. What, pray tell, could be causing our exports to rise? Let's read on. Courtesy of a 1.63% increase in exports and a decline in imports, which contributed another 1.14% print. As noted above, this alone was enough to explain the entire gain in Q3 GDP, and it is a function of U.S. support for European war economy as the U.S. exports record amount of commodities, oil and gas, as well as weapons to Europe. Folks, you want to know why they attacked Elon Musk for saying we want peace? Do you want to know why they attacked those 30 communist members of Congress who saw that the poll numbers were tanking and said, you know what, we got to sue for peace here? Do you want to know why they can't let this war end? You're looking at it. We're exporting all of the oil and gas to Europe that Russia was supplying, and not even enough of that. They're going to have to fall short. Our defense industry is in fuego. How do I know? Not by this article. I'm having my head ripped off on an earnings trade that I converted into a strangle, and it's Lockheed Martin up 9 consecutive days in a row. It's a rip your face off rally, up 24% in 9 days. Finally, government consumption, which was and remains an oxymoron, added 0.42% to the bottom line of GDP. So, while I want to get the warm and fuzzies that U.S. GDP increased by 2.6% for Q3, it was driven entirely by a war, and government spending when we are seeing inflation at 50-year highs. Go figure. And if you wonder why, I was going to go over this later on, if you wonder why you're seeing headlines come out like this, and it's stunning strategy reversal, Pentagon will no longer rule out the use of nuclear weapons against a non-nuclear threat. I was going to talk about this later on with regard to obstacles for the market, but we have a drunken sailor and minions, first mate, second mate, whoever's behind the scene, behind the wheel of this major vessel that is the United States, and we are heading towards an iceberg. And it takes a long time to steer that ship in the right direction in competent hands to make sure that we don't hit that iceberg, which is 90% underwater. We don't have that competence. So if we're sitting back, and I predicted that we were going to rally, you can go back Sunday Night Futures, last couple of live streams, I said, we're going to rally here. We're going to rally. We got the rally. Is it over? It could very well be. So let's go to comments. I see some people moving in here, saying hello. Luis, happy Thursday, brother. I know what you're going to say tomorrow night. It's going to be around 4 o'clock. You're going to be saying, hey, listen, cigar time, cocktail time. I got one more weekend of Sober October to go before I can indulge in an adult beverage. But man, that first week of November, we're going to have a cocktail party like they've never seen before. So let's get to it. We'll come back to all this if we have time. All right. While everybody's checking in here, we have Amazon after hours. Let's talk about their numbers. We'll take a look at the chart. We'll talk about where I think that Amazon's going to land in the short term anyway. So Amazon implodes more than 20% after missing on revenues, disappointing on AWS catastrophic guidance. Expects the challenges of inflation, rising fuel costs, weaker demand to persist for the holiday quarter. That line can be taken, copied, pasted into every earnings report that's missed so far this quarter. But it will be looking at our cost structure and areas where we can save money. What does that mean? It means they're cutting heads. They've already announced this. This is the reason why I did not want to trade Amazon on earnings. I kind of figured that we were going to have a bad earnings report. They've already announced, they already pre-announced layoffs there. This has been one of their drivers of their business, and now they're laying off people. It didn't mean good things for their earnings report. So they may as well have come out and pre-announced, which is why we did not trade earnings. So from a macro view, looking at the quarter alone, I'm going to go to some charts in a moment. And then we're going to take a look at the after hours price action. EPS 28 cents beat earnings estimates, but we never pay attention to EPC, right? EPS. We want to pay attention to sales. Net sales missed. Online store sales missed. Third-party seller services, that was a beat. AWS, this is the biggie. Amazon Web Services sales. I don't see their cloud business. Maybe that's in Amazon Web Services. It rose 27%, but it missed estimates. That's been the real driver of Amazon for quite a while now. North American sales, which is the preponderance of Amazon sales, they beat, which is good. However, their international business missed. Operating margins. Remember, Amazon has notoriously thin margins, and their operating margins came in 2% versus 4.4% year over year, and lower than the estimate of 2.48%. That is why you're seeing Amazon just get butchered in the after hours session. International operating margins, negative 8.9% relative to a negative 3.1%, missing the estimate of 7 point. This is just a catastrophe. This is just a catastrophe. And if you're wondering why a single earnings report is making such a big difference, you got to look at the trend, right? The trend is your friend. I may be a contrarian, but I look at trends. And the trend is clear and defined. Margins hit a high of 8.2% in the March quarter 2021. And what was that? Lockdowns. They were good in the June quarter. Ever since then, they have fallen off of a cliff. Revenue growth. Lockdowns were great ever since then. And let's face it, going into COVID, their revenue growth was already decelerating. COVID saved Amazon. And on a forward-looking basis, they are not looking any better. So let's take a look at Amazon in the after-hours session. Wrong chart. All right, so like I said, we had a peak to trough, roughly a 20% drop in Amazon after hours. We have since rallied back. I think that this is going to fail. This is a bear flag setup. I want to take a quick peek at their multiple. I think investors.com, this is IBD, updates in real time. Wow. So you're looking at a stock that has razor thin margins and they're getting smaller. Revenue growth is falling off of a cliff, and their multiple is 103. Buckle up, folks. All right, moving on to where I think that Amazon is going to, because it is going lower. After hours is at around $97 per share. Folks, we're using TrendSpider, 35% discount code below. That's my gift to you. Take advantage of it. 7-day free trial offer. I give it away free to members of the Contrarian Trader silver and gold level membership. So take advantage of my 14-day free trial offer. All right. So Amazon weekly time frame broke out last week. At current, we're going to break. Well, this is a breakout point failure, and it's also a bear flag setup. So I'm suspecting here that we're going to head down to 91 bucks a share on Amazon. Let's bring it up the monthly chart to see when the last time we were there was. And wow, it's been a long time. Back here, March of 2020. March of 2020. That was the earnings report that came out first during the lockdowns. We have now pretty much fully retraced the COVID rally on Amazon. will be there within the next few trading days. So we're going to fall back down into this trading range with a range of, let's call it 75. Wow. We're in that trading range after hours at current to about $95 per share. Buckle up, folks. Amazon's in trouble. All right, this dude with his sex stuff. Block. 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 Dude, not cool, man. This is a spam. If you typed in a message before this spam dude did, if you could just retype it in, I'll go back. I'll go over to YouTube and check comments. These spammers are getting worse and worse. Bear with me 1 second, folks. I'm going to go into the comments section. I got to go into YouTube to do that. I'm using a third-party software so we could simulcast to Twitter. Folks, I see that there's like 15 people on right now. Could I ask you to hit the like button, please? If you could do that for me, it would be awesome. Pete, hello, Pete. Falcon, hello. Message deleted. Falcon, hey, Bob. Is it true that bears loaded up on puts which expire tomorrow and have to be covered? Well, if you're no, they don't need to be covered per se. They can expire worthless. I think it depends upon the option sellers whether or not they want to take assignment of those shares. If we do get the big move down lower in the markets tomorrow, or they could either take assignment of the shares, or they could roll out of their current position into a later dated position. So they can let them expire worthless. The owners of the options do not have to do anything. It's the seller of the option that has the obligation. Like me, I have Lockheed Martin options that are right now. If it was options expiration, I would have to either technically I sold calls. They're in the money, so I'm down on that. So if I let them expire tomorrow, I go into Monday short, which I don't want to do. Of the common, it would take up too much capital. So I'm going to roll that trade out, assuming we don't gap down tomorrow and I make a profit on it. I'll roll out another week, another 30 days, whatever I decide. So it's really up to the option seller to make that decision. Falcon, I see you have a message here. Meta, that's one of your requests? Okay, we're going to take a look at that. Lewis, well, then I'll have to drink again for you, Bob. Thank you very much, Lewis. You have a heart, man. Last time tech earnings were this bad, Bitcoin dumped. This is Clark along with it. Yeah, that's a very good point, Clark. You've seen a bit of a disconnect between volatility and Bitcoin of late. In fact, I want to let's explore that a bit further, because the NASDAQ was down today. The Dow Jones was the only major index that was up. And up until a few weeks ago, you would have seen Bitcoin down along with, and I haven't looked at this all day long, so it is down on the session. But you could see that even when you had a sell-off in the markets of late, Bitcoin stopped going down. So Bitcoin looks to be stabilizing here. So good point, Clark. Glad you brought it up. Thank you. Denny. Hey, Denny. Tom. Hey, Tom. Okay, let's talk about Apple. All right, so Apple released Apple Slides. Despite record revenues, EPS beat as iPhone services revenues come in light. The services issue is a problem. Remember, Apple pivoted a number of years ago to steer their business more towards services. Ever since Steve Jobs left the company, there hasn't been a real product, a new product launch out. They've been living off the iPhone. So let's take a look. EPS, $1.29. They beat on EPS. Margins, they beat on gross margins, revenue. I think this is historic. Yeah, record for September quarter. Historic revenue growth. Products revenues up only 9% year over year. iPhone revenue missed. That's a problem. Mac revenue, which is only a small portion of their business, beat. iPad revenues, another small segment of their business, that missed. Wearables, that beat, small segment of their business. Now, services is a much larger segment of their business, roughly about half of their iPhone business, and that only came in with a 5% year over year increase, and it missed the estimates, not by a wide margin, but when you have your number one category, iPhone, not doing well, look at the trend here. And this is what we did with Amazon, going over the macro view. The trend is clearly down. Now, we saw a bump up in revenues for the September quarter, but the trend is still clear and defined. Services trending lower, that's in blue. And every other business segment is just really flatline for the most part. Their services revenue, this was supposed to be the juggernaut that kept Apple afloat, and it's declining. Look at the year over year Apple services revenue growth. I mean, wow, this is atrocious. This is telling you a story. Again, folks, this all goes back. Remember that March quarter of, actually, no, this is 2021. They had a great March quarter for 2021. Wow, this is really abysmal. We're down. We have been below the COVID lows for quite some time on Apple. I think while Apple is not making a big move in the after hours session, we're going to go to that in a moment, I think that it's got a lot of trouble. Let's take a look at Apple in the after hours session. So initially, it took it on the chin, rallied back. We're pretty much on the session. What was the anticipated market maker move? Well within the anticipated market maker move with implied volatility at 75%. This would have been a money maker if we had traded earnings, but I decided not to. Okay, let's take a look. If we're accurate, and I do believe that Apple is in all probability going to move lower, let's take a look at where we may have some support levels. So this is the monthly chart. We only have a couple trading days left to go here. Monday will be the final trading day of the month. We are right off of monthly support, right at 134.50 on Apple. What was the last tick? 146.55. So if Apple breaks through this support level, Apple becomes a short. My guess is that their PE is still reasonable. We'll keep this active for 30 days. So our alert is set here. Let's do a deeper dive. I mean, this is obviously the next support level on Apple, 134.50. Let's do a deeper dive, see whether or not we have any support levels in between there. Not really. On the week, we're trading down below support. I can't imagine tomorrow's going to be an up day. On the day, we saw a bearish key reversal bar on the session breaking down below support levels. Let's take a quick peek at their PE. Amazon still down about 12% in the after hours session. Apple, PE. Wow, Apple's expensive. Apple's expensive. On a relative basis, Apple's expensive. 24. Remember the mean on, granted, this is a premium company, but their revenues are declining and they don't have many products in the pipeline. So their multiple is rather rich here. Let's go to comments. I will dump the short fund of Apple AAPL for Boyle. I sold 40 and plan to buy back at 35. The weather is cold. Okay. Yeah, Boyle was weird today, man. There was a big spike up in natural gas prices overnight, yet Boyle was down all day long. Microsoft 210, Google 87, Amazon 86, Apple 138. What did you do? You bought Apple? You shorted it. Intel was a wild card for me. I bought it at 26.30. Okay. Sell some calls on Amazon. But I would stay pretty close to the money on those Amazon calls. The shorts were scared as Warren overweight on Apple. I do not like this PE. I agree with you, Tom. I totally agree with you. This is a problem. I mean, it's a bellwether stock, but I mean, it's not looking good. And I want to bring up this other chart for you. Let's see if I have it up here. I may have already brought it up. I think I did. Yeah, this is it. So one thing that you need to, and this is going to be a double whammy here. Let's bring the Fed's balance sheet up. Okay. So what you're looking at here is in red is the Federal Reserve's balance sheet going back to 2013, right? In blue, you have the aggregate price to free cash flow, which is everything, free cash flow for the big FANGs, Microsoft, Apple, NVIDIA. No, I'm sorry, I shouldn't say FANG. Microsoft, Apple, NVIDIA, Tesla, Amazon. And you could see that the correlation between the Fed's balance sheet and the free cash flow of these companies is lockstep. So that being a known, what did the Federal Reserve's balance sheet do? This was released after the bell today. Another lower low. We are at lows now on the Federal Reserve's balance sheet since, where is this? 8.7 December of last year. So all of the accumulation of treasuries at the Federal Reserve, mortgage-backed securities, treasuries, et cetera, that the Federal Reserve accumulated this year, gone. Now, to drive home the point of what I was just trying to make, let's go to a 10-year view here. You take a look at the S&P 500 going back 10 years. Here you have it, right? A juggernaut, a juggernaut. But that's because of this. And remember, what drove today's GDP was not the consumer buying an iPhone. It was not people spending money on Facebook. It was not businesses buying advertising on Facebook. It was not people buying stuff on Amazon. It was energy, 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 and of course the government. Meta. Meta's going a lot lower here. Plunges to double digit. I think this is a done company. I think they finally jumped the shark, and they're going by way of MySpace. It looks like this metaverse is just doom. Morgan Stanley cuts. Not that I pay attention to this stuff. I just find it hilarious. Cuts to 105 from 205. Genius. Cowen, 135 from 205. KeyBank Capital Markets cuts to sector weight, whatever the hell that means. Jeffries buy $200. You're out of your mind. These guys. Number of buys before, 68% buys. Now only 65. They want to buy this stock. Think about it. Here, let's bring it up. Buy with a $200 price target. Would you want to buy this stock right now with a $200 price target? These guys, pure salesmen through and through. And that being said, I'm a salesman too. Sign up for our 14-day free trial offer at the Contrarian Trader. Free. What else do I have here? I'm looking for any other stuff I could share. Oh. All that oil that we're selling. Coming from here. Strategic Petroleum Reserves. We were at 750 million barrels at the peak, now down to nearly 350 million barrels. And this guy is walking us into a war. Well, we're already at war, to be honest with you. All right, let's go to the weekly charts. Take a look at how we're poised to close out the week. And as we go through this, folks, keep in mind that we have one trading day left to go. A lot can happen here. So I want to begin with some bullish charts. We always begin with the bond market. Why do we always begin with the bond market? Because the bond market is the tail that wags the stock market dog. Always, always, always watch the bond market. And on the week, the 10-year yield, which is what you're looking at right now, is back down below a 4 handle, which should be bullish for equities. The however is that the earnings reports are so jarring out of the FANG names that they're not catching a bid. They can't catch a bid. So even with economic data, we had durable goods data that came out today, horrible. Even the GDP data that came out today, it was energy that drove the energy and defense that drove the GDP numbers, yet the consumer's dead. So we're not getting much of a reprieve out of equities as we might expect with the 10-year yield moving lower, daily view. Looks like we're going to go lower here. Moving on. Bonds, weekly chart, a monster bullish reversal bar, an inside week. Money flowing out of equities, right? We haven't seen this. We've seen stock market, bond market go down together. The correlation has been tick for tick. So now what you're seeing is equities go down, money moving into the bond market now that they can get a halfway decent yield. And that yield is still negative. They're losing money on that yield, but they'd rather be in bonds taking a loss on their yield adjusted for inflation than keep money in equities. And it makes sense. I mean, if you're gonna invest your money in tech stocks expecting a return on the capital appreciation, net asset value, yet in the after hour session, your Meta stock is dropping 20%. Your Facebook stock, or sorry, I keep doing that. Still can't get over Meta. They're going to change the name back. Facebook stock from a high after hours yesterday of 142 down to 98. You know what? That crappy yield in bonds is looking pretty good. And you can even have some upside potential here on the bond. So stocks are now getting a little bit of competition with the bond market. Tips. Breakout. One trading day left to go. What are they yielding? I think we're around 7%. Oh, almost 8%. I knew it was a 7 handle. The dollar, we've been bearish on for the past several weeks. Finally, we got a break on the dollar. Our gold mining stocks, ripping. Silver mining stocks, ripping. Good week. Volume, heavy. And the MACD hasn't even gone negative yet. We're going to talk about the whys behind the breakdown on the dollar in a moment. So US dollar daily chart. Today we had a recapture of support. Stokes still declining. That's your momentum indicator. Volume below average. Let's check out the final 30 minutes of trade. This gives us an idea of how we may open up tomorrow. Looks like we're filling the gap. Volume strong into the close. But I'm guessing a lot of that, let's go to a 5-minute chart, was selling as well. Looks like a bit of tug of war. Yeah, look at the volume into the close. Final 5 minutes, massive volume to the downside. Now, the reason why the dollar is so weak, and you may be new to me and you don't know who I am, why am I talking about the dollar? Why is it so important? Remember the whys of why we've been doing what we've been doing. We've been building core positions in gold stocks, in emerging market stocks. Why? It's because we knew that the dollar was a flawed currency. It was on a bed of quicksand, and the sand is beginning to shift below the feet of the US dollar now that we've made a pariah of ourselves with this Ukrainian war, and we're empowering BRIC countries to come out with a new currency relative to the US dollar. So the euro is the proximate cause of as to why you're seeing dollar weakness. I called this a few weeks ago with members. I said, watch out for the euro. It's weak back then. I said, watch out. This is going to break out soon. Sure enough, we got the breakout and we did it on volume. The euro makes up 55% of the dollar Dixie basket. What else has been strong? Of all currencies, the Japanese yen. 2 back-to-back up weeks. We haven't seen that since June. So euro strong, yen strong, dollar weak. What does that mean for our gold stocks and emerging market stocks? They're going up. The volatility index been down all week. All week. S&P's down, VIX down. So there's just not enough fear in this market to take it down. Maybe it'll change tomorrow. Today we did reverse off of 27 on the VIX. Will they give me an intraday chart here? Oh, we're moving up higher tomorrow. 30-minute chart, folks. We're moving up higher. Remember, this is not taking into consideration the price action of Apple, not that Apple's down big in the after hours session. It certainly doesn't take into consideration Amazon. And we broke out on a 30-minute time frame in normal hours session. We've broken out an RSI, higher lows, higher highs. I think we could draw a conclusion here, Stokes, higher lows, that we're going to have a rough morning tomorrow. Let's go to the futures action. The knee-jerk reaction by the futures market was significant. At current, we're only down a little over a half percentage point on the NASDAQ 100. I don't think that this holds. And if they rally this market tomorrow morning, do not go chasing this market. They will pull the rug out from underneath you. Wait until that first hour of trade is over, then make a decision as to whether or not you're bullish or bearish on the market. Before I execute it on a buy order, I'd wait until the final hour of trade. The Dow Transport weekly chart, a breakout, one trading day left to go. I've been calling this a bear flag setup on the Dow Jones. We'll see how it plays out tomorrow, but I may get proven right here if we retrace and we close back down below 13,200 on the Dow Transport. Now, the Dow Jones Industrial Average has been in fuego relative to the other indexes this week, and it makes sense. Bank earnings were okay. You have three financials in the Dow Jones Industrial Average. You have Boeing in the Dow Jones Industrial Average. I think that's still down on the week, though. We've rallied right up and into resistance. Here's our upper band. This is our secondary uptrend line. We broke through it the last time around. We could rally up and into 33.5 before we hit really significant resistance. I think we're going to pause here this week, consolidate, and then make another attempt to break out. Usually November is a very strong month for equities. It may not be for the triple Q names. Now, the Dow Jones is up on the week by 3%. S&P 500 is only up less than half of what the Dow Jones is. And you rarely see this, but the Dow Jones is outperforming the S&P 500. Daily view. Two consecutive down days. Bearish key reversal day today on light volume. Triple Q's weekly chart is down on the week. Folks, think about this. Think about this. What you're seeing happen here is you're seeing sector rotation. You're seeing money move from this bucket, the triple Q bucket, to this bucket, the industrials, the financials. So this is where, if we do break out, it's going to happen on these big, stodgy, dividend-paying names. The banks. The banks are beating the Dow Jones Industrial Average this week. So we're loving the banks here. I mean, BlackRock is just in fuego, that communist company. That's up over 8.5% on the week. So, you know, if you're an option seller like me, listen, here's how I'm looking at this market, okay? You have the dollar, which is breaking down. So if you're looking for rip-roaring upside potential, you look at your gold stocks, you look at your silver stocks, you look at your emerging market stocks, but no China, ex-China. You don't want anything to do with mainland China or Hong Kong. Same thing now. So you want to take a look at those names. If you're looking for low risk or a core portfolio, Look at your banks. Who's making money? The banks are making money. Who else is making money? The pharma names, big pharma, of course. Who else is making money? Defense. Who else is making money? Energy. That's where you want to be. That's where the money's going. And as much as I disagree with them on pretty much everything, there's always a bear market somewhere. Kramer. Technology on the week was a leader, now a laggard. Avoid. Semis down 1/3 of a percentage point. Avoid. I'm not even going to the daily chart here, folks. There's just no sense. This is not where the money's going to. If you're looking for short opportunities, look at these names. LABU, we have a position here for disclosure purposes. This is a biotech ETF, leveraged ETF, not for the faint of heart. We have clear resistance above. We'll look to add more on a breakout. Maybe we'll get it tomorrow. What do we do on the day today? Reversal bar. I liked something here. I want to point this out to you folks, and in future weeks, we may come back to this if I'm right, if I'm wrong. But I like to make these calls here early before you have the big move, right? I always like to say, and this is my saying, the market sends you signals. And the market is sending us a signal here. What might the signal be? Add a comment below if you know what the signal is. Okay, I think we're good. Let's go to the comments, see how many technical wizards we have here. No responses. No responses. Leaving me hanging out there. I know there's a lag. I'll wait a second. What's this setup? What's this formation, folks? What's the formation? All right, time's up. Head and shoulders, excuse me, cup with handle formation on RSI. And guess what? We are breaking out on the week on LABU. Even though we're seeing a lot of resistance above. Great volume. Daily view. Daily view, Bob. Anytime. Anytime, Bob. There we go. All right. So we already went over this. Reversal bar. We're not ready to buy here yet. I would sell puts. Selling puts is certainly an option. And for those not familiar with what trading options is, or selling options, you think it's bearish. It's not. It's bullish. We're the bank. We're the casino. We're not the gambler. Unless you're trading earnings, then you are a gambler. All right, so XLY, this is your discretionary names. They were doing well. They're still doing well on the week, but you have a lot of resistance above. I would avoid this daily view. Remember, it goes back to that GDP report. The GDP report it was a headline beat, right? Strong number. The problem is what the underlying narrative was of that report. The consumer is dead. It's dead. So why are you going to buy discretionary names? There's no, there's no money there. And they were down on the session as well, as they should be. Notice Menomi Mai. How are you doing, kind sir? I am doing quite well. Thank you for asking. Thank you for joining in. Clark, my main Caballero. Absolutely correct. I know there's a lag, and you probably put that in there before I gave you the answer. We've been NY Jets. You've been around a long time. Yeah, this tells me you haven't been watching lately, and I'm very, very upset with you. So, kidding, of course. We've been in recession for a quarter now. 2 back-to-back negative quarters of GDP is recession. They changed it so they can go into the midterms. They changed the definition going into the midterms so they could say, oh, no, we're not in recession. What did the banks do? They played along. What did the media do? They played along. If they didn't change the definition, the media would be saying, yeah, we're in recession. But they changed the definition. I don't play that game. You come here to get the truth. I don't adjust it for what the mainstream media has to say. We don't play that game. And that's why we have a loyal viewership. So, yeah, we're in recession. We have been. And notice, forgive me, it's hard for me to say your name. On Twitch, one of our few Twitch followers. Thank you very much. Got to grow that audience more. I believe so, Trader Isaac. Yeah. So let's go back to LABU. It is up. Well, on the day, it's down. XBI. XBI actually moved more than LABU today. That's strange. The chart looks very much alike. I don't think they are. No. We were up yesterday on LABU. No, they could be. They're correlated. Yeah. But for whatever reason, XBI was down more than LABU today. It doesn't make sense. Let's bring that back up again. I mean, LABU, this should have been down nearly 4%. Oh, it was. Okay, no, it was down. For whatever, I saw 0.28. I thought that was 0.28%. I stand corrected. Yes, you are correct, Trader Isaac. The so-called guru, me, was I had a brain fart. We gurus do that. Oh, okay. And why Jets joking? Yeah, stock market gurus. I'm seeing this. I'm going to probably bring it up. One of these guys on YouTube, he put out a Instagram thing, and this guy's got like a million followers on YouTube, and he said the most stupidest thing yesterday. I almost fell off my chair. Just play it when I find it. Discretionary names down, not looking. Avoid the consumer. You want to avoid the consumer. Emerging markets. EEM is down on the week, but that includes China. When you X out China, we're down only 0.02%. Think about it. With China, down over 2%. Without China, this is EMXC. This is emerging markets, no China. This is what we own, and we're buying more of it. Weekly view. I don't think you should buy this right here, right now, unless you're dollar cost averaging in week after week, month after month. If you're looking for a place to buy, I would look for a higher low weekly time frame. What's that China ETF? XLI? No. What's China? I don't know why I always forget the symbol for the China ETF. Here, let's just bring this up. Weekly view. China down 7%. This is in crash mode, folks. You got to avoid China. Energy, weekly view. We're breaking out. We're breaking out. And even with the drawdown, this just goes to tell you, after the midterms, we have a major problem. Because remember, going back to this chart here, here is the what did I do with it? My chart of the SPR. because I want to draw. Let me bring it up here. Bear with me 1 second, because I want to show you a bearish divergence or a bullish divergence for oil. Bearish for the consumer, bullish for energy. So here you have it. I brought this up earlier. You're seeing the U.S. strategic petroleum reserves get drained, right? So you think that the price of oil on the week, now that we've been really hammering the oil markets, it's got to be getting beat up, right? Well, let's check. Intuitively, you would think that that's the case. No. Oil is breaking out, despite the fact that the potato in chief is draining the reserves. Why? It's because there's not much left. And once they're done draining them, they got to refill them. So wait until after the midterms, and you're going to see a breakout on oil like you've never seen before. Now, normally, let's go back to energy for a moment. And this is why I'm so bullish on energy. Normally, if you go back over here, correlation, right? So XLE versus oil. The correlation going back only a few months ago was high 90s, right? But all of a sudden, the correlation dropped off the cliff. Why did that happen? Simple. They're draining the SPR. They're manipulating the oil markets. Energy traders know what's going on. They're not going to dump their shares because as soon as the midterms hit, oil is going to spike through the roof, and you better be long of energy stocks. That's why Warren Buffett's buying up Oxy. And when you take a look at gasoline weekly chart, you wonder why the GDP report came in so hot and heavy today. Look at gasoline prices. Why is the consumer dead, as noted by the GDP? Gasoline prices. Gold, weekly chart. Now, the dollar's down on the week, gold up. Not shocking. Our gold mining stocks, we are up on the week. We were higher, 0.75 of a percentage point. Our trading vehicle for our gold stocks, Nugget, we're up over 4% on this trade. Our trade in silver, it is up 2.38% on the week. Our silver mining stock up 0.42%. We were higher. We've hit some resistance. So that's the week that was. We have one trading day left to go. A lot can happen. But you could see here, folks, again, we're going to do a recap. What are we looking at in terms of investments moving forward? Well, we're going to be watching the Dow Jones Industrial Average. We're going to be watching the banks. We're going to be watching for the big industrial plays that pay a dividend. We want to put money to work there. We've already got money put to work in the gold mining stocks, silver mining stocks, and we've begun to build a position in emerging markets ex-China. Why do I think that that's going to go up higher? The dollar is breaking down or has broken down. Why is that bullish for emerging markets? Emerging market debt is denominated in US dollars. Therefore, when the dollar, this is a weekly chart of the US dollar, lower highs and now a breakdown. When the dollar breaks down and gets cheaper, the money that their currency is able to buy more dollars to pay back their debt. So that's why you want to see money move into emerging markets, because they don't have the valuations that U.S. equities do, and they don't have the downside risk. So that's why we're putting money like contrarians to work in an area where nobody's looking. They haven't been looking. Nobody wants the gold stocks. Still, it's climbing a wall of worry. Nobody wants emerging stocks. Still, they're climbing a wall of worry. They're not going to want these stocks for another couple of months. There's plenty of time to get in, join, 14-day free trial offer. This is what we're doing. Enjoy the rally up when the dollar finally gives way. Let's do some chart requests. First, we'll go to comments. The lovely Jody is here. Welcome, Jody. Trader Isaac, the gentleman that he always is, being cordial. Has Buffett bought Oxy above 60? I'm not quite sure about that. Most of his buys were on dips. I thought you could be right. I'm not exactly sure. I know he did add to his position, though. Yeah, definitely. Val, BHP, one of my favorite. Rio, definitely. We could take a look at these names. We're going to be using TrendSpider, folks. If you're not currently a member to TrendSpider, you're missing an arrow in your quiver, because this is where trading is going. Automated technical analysis. Val, 35% discount code below. I give it away free to silver and gold level members. Val. Let's go high level. Let's go with the monthly charts. You know, I wouldn't be a buyer of Val here quite yet on the month. We're at resistance. Let's do a deeper dive, see whether or not the weekly chart influences me. Higher lows on your momentum indicators. I'm not liking the volume here. We're holding the VWAP. We broke support today. We closed off the lows of the session to close green, but relative to yesterday's closing price action, we were down on the session. So be careful here. I think that longer term, that Val will definitely go up as the US dollar declines, but it makes sense. The dollar was up today. Val broke down. BHP, probably going to look similar. My internet connection's so slow tonight. Killing me here. Did I lose connectivity? I'm good. Monthly view. We're looking at monthly views because we care about this as an investment. So what I'm looking at here, while we're down on the month, this is not a bad chart. We're holding the 200 period monthly moving average. I think we're setting up for a W formation. We're within a triangle formation, no new monthly lower low. So we've stopped going down. So this is becoming constructive on a monthly time frame. Weekly view. Weekly view. Resistance up at the 200 period moving average. You could buy here. Just use a stop right below the lows of the 26th of September. I think this could be bought. Nibble, dollar cost average in. I wouldn't be aggressive, but I think it could be bought. What else do we have? We did BHP, Rio Tinto. Clark, I have a conflict of interest with the ride shares, so I can't go over that chart. My apologies, but I want to be honest, and it's not a it could be a perceived conflict of interest, and I want to avoid that at all costs. So I'm going to have to pass on that one. Any ride sharers I need to pass on. Rio daily chart. Rio's looking good on a daily time frame, consolidating nicely within a wedge formation. The automated trend lines, take them off, put them on. There you go. Upper band in red, lower band in blue. Macro view. Much like with BHP, we've stopped going down. No new monthly lower low. Resistance above. I think this is a buy on a close above 55.70 per share on a weekly time frame. Rio. Sorry, Clark. Sorry. I don't want the wrath of God coming down on me vis-a-vis some sort of cease and desist. Especially betting against the stock, that's a problem. Airbnb. I like this company. I think that this could be bought. We have resistance above on Airbnb. We broke out of a declining downtrend channel back in July, if you could believe it. And we have been consolidating ever since. We've never pulled back to do a retest of the breakout point. Let's set up an alert here. This may not fire off for a month or so, even more. Let's go 60 days. If we pull back, suppose we get a sell-off in equities, you got a risk-off trade. Don't forget, they have earnings coming up. We get a sell-off here. I'd be a buyer on a pullback to do a retest of the breakout point. If you see an 80 handle on Airbnb, I think it's a buy. Right now, I'd be looking to sell premium down at an 80 handle, 85, selling premium going out. Keep in mind, you have earnings coming up, so I wouldn't do it before earnings. After earnings, I'd put that trade on. Let's go to a daily view. Yeah, it broke down today. Avoid Airbnb short term. Longer term, I think it goes higher, but it may move lower first. CVX for Jody. We'll call it a night here. Chevron. Go to the monthly chart. I mean, Jody, this is going up. Right now, we're at a monthly resistance level. I haven't looked at this chart in a long time. So that's the algorithm working for you. Again, just joining in, automated trend lines, 35% discount code below, TrendSpider. The only company that sponsors me, well, that I will talk about anyway. We're looking for a breakout here. Resistance at 180 on Chevron. I think that this could be bought. I think it's going up higher. We've already had an intra-week breakout. If you want to be safe, wait for a close above 182.30. Long entry on a momentum play. Daily view. Yeah, you saw a bit of a reversal bar here. So I'd be looking for a retrace on Chevron. The automated trend line is popping up. Support down at 171. You might even get some support at this volume shelf right here at 183. So between 183 and 171.50, I'd be looking to leg into CVX, initiate a position, add more on a breakout when your alert fires off to new weekly higher highs. You are welcome, Jody. Folks, thank you for being here. If you didn't hit the like button, please smash that like button. Helps me out with the YouTube algo. Sign up for our 14-day free trial offer. Get TrendSpider for free. Get our trade alerts. If you're not ready yet, that's fine. TrendSpider 7% 7-day discount, 7-day free trial offer, 35% discount code. Have an awesome night. Be well.